Hi everyone, this is Professor Boucher, and today we're going to go over multi-step income statements. Previously, we've looked at single-step income statements, which provide some useful information. They let us know if we're operating in the black or if we're operating in the red. Red means that we're not doing so well. So now we're going to go ahead and start to look at why we would prepare a multi-step income statement. The multi-step income statement gives us a lot of information, both for internal users and external users of the financial data. It's going to be broken up into three main sections. The first section, up at the top, is going to be our gross profit section. It's going to take into account things like our sales allowances, and our cost of goods sold. It lets someone know how much money we have to provide for the rest of the operations from the business. Underneath that is going to be our operating section. So we're going to see things in there like our selling and administrative expenses. The selling expenses are going to include things like salaries for our salespeople, things like that. Where our administrative expenses are going to include things like our accountant's salary. Lastly, the last section is going to be the non-operating section. So these are things that are not going to occur in the main line of our business or not going to incur as part of our regular processes. So let's go ahead and jump into one of our exercises. All right, so we've got one of our exercises here. Let's see what's going on. We're going to use the information provided to prepare a multi-step income statement for Zacharias Company. We see that when we look at it, the top part here is already in good form. In good form means that we would have the name, the type of the statement, and the period. Just as a reminder, when we are working on an income statement, it's going to have a start date and an end date, which this does. It tells us that it's for the year ended December 31st. Now I'm going to go back and see the account totals that they've given us. Sales, discount, cost of goods sold. As we go through these, I'm going to evaluate to see, are these going to make their way onto an income statement, or are they supposed to be on one of our other statements? So let's see what we have. Sales discount, that's income. Cost of goods sold, income statement, loss, sales return, and administrative expenses all go onto our income statement. Accounts payable, though. This one right here, the giveaway is payable. This should actually be on our balance sheet. So I am not going to put this on our income statement. The rest of them, though, the rest of these check out. We can go ahead and start creating an income statement. So we're going to be starting this multi-step income statement like any income statement with sales at the top. And my total sales here are $485,000. What I'm also going to do is, as we go ahead and work through this, I'm going to cross out each one of these as I go through. That way I know I've taken care of it. So we said the first section is gross profit. It's going to list things like our sales. Then what we're going to do is we're going to come down to our net sales. So we're going to have to take out things that reduced the overall sales. So let's go ahead and recognize that we're going to have less because these are going to be reductions to the sales amount. And the first one that we have is sales discounts. Now, a sales discount is when we go ahead and provide a discount to someone. If the product was going to be $1 and we sold it for 95, or perhaps we gave them a trade discount after the sale, that would be recognized as part of it. So these sales discounts account for $4,300. And we're going to cross that off as well. Now, we will go ahead, I put this in the left-hand column. Let's talk about what's going on with these columns. So we have a left column and a right-hand column. This is not debit and credit. So up until this point, when we saw something in the left, we would think debit, and we saw something in the right, we would think credit. For this case, it's just left and right. So why do we have two columns? The basic way to look at it is that the left-hand column is going to be used for subtotals, and the right-hand column is used for totals. It lets us know that if we want additional information on things, we look to the left. So we've got our sales discounts. The next thing up here that looks like it would make its way into a subtraction from sales would be our sales returns and allowances. Our sales returns and allowances recognize the idea that some people don't pay us. We do our very best to make sure that we only sell to people who will pay us back, but we can't be perfect at that. And we know that some people run into business issues. So we're going to go ahead and recognize a sales returns and allowance, and that was of $6,800. And we can cross that out. Now that we have these two items here, we're going to go ahead and total them and put them in the right-hand column. This is going to be $11,100, which were subtractions from our sales, which is going to lead us to our net sales. And our net sales provide us with $473,900. The next thing that we're going to account for is our cost of goods sold. Now, our cost of goods sold represents what we had paid for the items that we sold people. And we see that up at the top, our cost of goods sold is $392,000. This is going to lead us down to our gross profit. Gross profit is used with every merchandising company. It helps us determine how much money we're making off of the sale of our goods. This amount of profit that we're making, our gross profit off of the items, helps provide us revenue for the rest of our operations. So our gross profit for Zachariah's company is going to be $81,900. Now we're going to move down into our operating expenses. These are all expenses that we incur as part of our normal operations of our business. So we're going to title that for the users as part of our operating expenses. And that is just a title. So now we're going to go ahead and start listing them out. Now the ones that we're going to be doing first, these are all subcategories or they're additional information. So we're going to put them in the left column. And also as part of that, we're going to indent them from the left-hand side. So we see that we have selling expenses of $22,000. I also have administrative expenses of $11,300. Now this is going to be my total operating expenses of $33,300. And because that's a total, I'm putting it in the right-hand side. That's going to lead us to the income from operations. And I'm going to take the 81,000, subtract the 33,300 from it, and we are going to end up with $48,600 as our income from operations. Now we're moving on to the non-operating section. This is the section that goes over the things that aren't part of our normal daily activities. So we're going to see things like interest expense, perhaps rent revenue in here. And what we're going to do is instead of having one line for other income and other expenses separately, we're going to combine them together. And we're going to see what the total impacts are on our income statement. We're either going to have one number that's going to be an addition or one number that's going to be a subtraction. So let's go ahead and take a look at it. I'm going to go ahead and let the user know we are moving to our other revenue section, other revenues and other expenses. Now you may also see this titled as other revenue/gains and expenses/losses. In this case, I kind of ran out of space to write it, but it's assumed as part of the name. So let's go over the accounts, the information that we had above, and see how we're going to include that. The first item that we had was interest expense. What I'm going to be doing again is indenting them. Because this is a subcategory, we're going to list them all out and have a single impact. So we've got our interest expense. And since this is a subtraction from our income, I'm going to put it in parentheses. $2,800. Now we had other sections where items were subtracted, but we didn't put them in parentheses. The parentheses are unique to the other revenue and expenses section. The next one that I have is a loss on sale of equipment. Our loss was $15,000. And again, a loss would be a subtraction from our income, so it's inside of a parentheses. And lastly, we had rent revenue, which totaled $4,800. Revenue is in addition to our income, so we show it as a positive number. Now we're going to let the user know that we're going to total up our other revenues and expenses. And because this is a total, we're going to go ahead and put it on the right-hand side. Now again, this is a sum total, so I have minus 2,800, minus 15,000, and plus 4,800. I'm going to come up with a combined impact to my income statement of a minus $13,000. And this is going to lead us to our final step, which is our net income. So we'll take our $48,600 income from operations, subtract out our total other revenue and expenses, and we end up with $35,600 as our net income. Thank you for watching, and I hope to see you again soon.